Okay, so now in this trade, I'm going to look at $1,362 loss. So before I get into it, I want to just show you how my trading has degraded. I was at one point $50,000 in profit. $50,000. 50,000. And I lost it all. And it took me a long time to make it. And see how fast you lose it. See how fast you lose it. And it's all to do with risk and reward. So if you look at this point here, you'll see my wins are $965 on an average. That's my winning average. My losses, which were really tight, $300 losses, have now kind of, with a lot of flax and a lot of leeway, I've now brought it down to $1,200. So that's the room that I'm actually allowing my losers to run. $1,200. So my profit factor is less than a 1. I used to have a profit factor of 3 or 4. And in total, I've made $107,000 in profits, and I've lost $107,000. So that's why I'm net zero right now, which is crazy. People should come and study the psychology of what's going on in this brain of mine to lose this way. And the biggest reason that I lost was this massive $37,000 loss. That one big loss, and everything else was minuscule. The next big loss was what I experienced yesterday. But everything else was pretty small. I've had good healthy runs here. Healthy runs. I was picking up the steam, and then again loss. And that's kind of been my story. And the reason why this ebbs and flows is that I have practiced the short side of the market, but I've not really had a chance to practice the long side of the market. So when the market turned long, I was clueless. I did not know. It's like you're going to play a game but don't know how to play it, or you're not really practiced it, so you don't know how the market's how the market's going to react. If it touches this moving average, what's going to do? I don't remember. So that's what's causing me to decline my losses so bad. Okay, now into this trade. 1362 loss. Now, based on my rules, I should only allow a 10 point loss. That's the max I should allow. So this is the day time frame, 5-minute time frame. And this 5-minute time frame is so small, 72, 82, 92, and it's already costed me so much. It's already costed me so much. So just 20 points and you're out of minus 1.4. Well, technically it's more, 68, 78, 88, 78, 88, 98. So almost 30 points. Almost 30 points. So if I look at this, this was the right side of the V, and I took a shot, assuming that the market's going to fall down again after a big fall. So this is the early pullback, I forget the term. I'm gonna just. I had a term for this kind of event. I'm just trying to find what do I typically call these. Give me a second. Yeah, so I have my. I think I call it the early pullback. I just want to confirm it. Yeah, first early pullback or second early pullback. So this is the, I guess, the first early pullback, and I was expecting the market's gonna like go up, go down. So I was expecting a pullback, not an early pullback. But I just timed it incorrectly. Now I want to go to the bigger time frame because, yeah, so this is the first pullback. Now it went all the way up to 10, and I was expecting, which it did go down. It did go down. And I was expecting, okay, the market's here, and initially when it touches, it kind of like reverberates. That's what it did. So it eventually did turn, and I would have been into a profit, but it's just that. So if I take anything in the area of value, that's a good enough point for me to get in, because the market will, and then you keep lowering your stop. That's a good enough area. Same thing here. So I see it going down. I was like, yeah, that's good. And it did eventually like go down. I just got stuck in this noise, you could call it. So the other thing I should do is to move my stop loss above the 20. But if I take it here and keep it above the 20, there's a high chance of you being in profit longer. So overall, the timing was good. It was still within, not completely, but still within like the 10 and 20, which is like my sweet spot on the 1 hour. But yeah, it was just timing, and I got shaken out. So I should always keep my stop loss above the 20. Okay, let's document this. So I'm gonna label this as a pullback. And what pullback would this be? So this is the first pullback, second pullback, third pullback. So 5 minute, I took it basically at VWAP. And you shouldn't be taking it when it's like this. This is a good place to take it. And on the 1 hour, I took it at the 5 EMA. Okay, entry. exit pre-cross, definitely pre-cross. What time did I take this? Did it follow the same trend? No, it did a reverse. So afternoon reverse. I was expecting the market to fall down again and took a reverse, took a pullback trade. However, this was the third pullback on the 1 hour time frame, which makes it less likely the pullback would hold. Plus, the market had just fallen down steeply, which is an indicator that the market I need to be more careful when taking trades after the run is completed. I also need to be careful of only taking trades inside the area of value and not straying or catching trades after it passes the area. Yeah, so that was my rant on this particular one, and I'll see you in the next